Man Industries Q2 FY24 Results Conference Call. As a reminder, all participants will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone telephone. Please note this conference is recorded. I would now like to hand over the floor to Mr. Dhananjay. Over to you, sir.
Thanks, Madhi. Welcome you all for the Q2 FY24 earnings conference call of Man Industries Limited. We are happy to host the management team of Man Industries. From the management side, we have Mr. Dr. Ramesh Mansukhani, Chairman, Mr. Nikhil Mansukhani, Managing Director, Mr. Ashok Gupta, Chief Financial Officer, and Mr. Rahul Law, Company Secretary. Management will give the initial remark on Q2 results and also the current outlook. Post, we will have a Q&A session. Over to you, sir. Thank you.
Thank you, Mr. Dhananjay. Thank you, Madhuri. Myself is Ramesh Mansukhani, Chairman of the Man Industries. Good afternoon, everyone, and welcome to the company's earnings conference call for second quarter and half year of the financial year 2024. I would like to thank you, our host, Sunil Secretary, for hosting the earnings calls. I'm now giving over to Mr. Ashok Gupta, CFO of the company, and then he will give the brief about the results.
Thank you. Good afternoon, everyone. On the results front of this Q2 of FY24-25, FY23-24, on standalone front, our total income stood at 1,027 crores. That includes other income and representing growth of 154% on year-to-year basis. Our adjusted EBITDA stood at around 95 crores, with EBITDA margin reported at 9.27%. Net profit stood at 43.5 crores, while the PAT margins were 4.23%. Similarly, standalone financial performance for the half year, we reported a total income of 1,489 crores, which increased by about 64% on YOY basis. Our EBITDA stood at 146 crores, which has grown substantially by around 86% on YOY basis. With EBITDA margins at 9.8%, we reported net profit of 55 crores, which has grown by 12.8x on YOY basis, with PAT margins at 3.72%. Now, let me begin by giving a brief on the consolidated financial performance for the quarter. Our total income stood at 1,037 crores, representing growth of about 136% on YOY. Our adjusted EBITDA stood at around 89 crores, with EBITDA margins reported at 8.55%. Net profit stood at 39 crores, while PAT margins were 3.76%. Coming to our consolidated financial performance for the half year, we reported total income 1,516 crores, which increased by about 58% on YOY basis. EBITDA margin is around 135 crores, which has grown substantially by about 600% on year-to-year basis, with EBITDA margin at 8.93%. The reported net profit is around 50 crores, which has also grown up by about 1,000% on YOY basis, with PAT margins of 3.32%. On the operation front, the unexecuted order book as on date stood at about 1,400 crores to be executed in next 6 to 7 months. We continue to have outstanding book position as on date approximately 14,000 crores, which are at various stages of evolution for several oil and gas and water projects in India and overseas. The company therefore expects good order flow for the upcoming quarter as well as next financial year. The ERW pipe plant in Anjar, Gujarat received the prestigious BIS and ISO certification, and the API audit was successfully completed and closed. Now, the company can produce the API pipes, and they are exploring new avenues for strategic partnerships also. We recently announced issuing up to 25 lakh share warrants convertible into equity shares to promoter group, and the company has received the shareholders' approval on it in their shareholders meeting held on 1st of November. Seamless stainless steel pipe unit is progressing very well. Long lead equipment orders are already being placed from Europe and Japan, and the project is likely to be completed by second half of FY2024-25. With that, I conclude my operational statements, and we can now open the floor for questions.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. So the first question comes from Utkarsh Somaiya, individual investor. Please go ahead.
First question is on your gross margin. It has fallen quite a bit quarter on quarter. So can you please let us know the reason for this thing? Is it on account of any raw material price increase? And if yes, can you please also tell us which raw material it is? My second question is on your debt. Looking at a cash flow statement, it looks like you have repaid all of your debt. So, and you yet have 21.8 crores of interest cost in this quarter. So, does this mean that going forward, your debt will be, your interest cost will be significantly reduced? And my third question is your inventory has gone up. So, can you please tell us the reason for the same? Thank you.
So, Somaiya, good afternoon. I am replying your first question. Raw material prices is not gone up. The cash flow is comfortable. Interest burden will be reduced for in coming time. The reason particularly, whatever loan we have taken for the ERW plant, in our business, the nature of the business, we have to take a lot of approvals. In API, which is American Petroleum Institute, their audit is completed, and they approved us. So now the ERW, the new plant where the interest burden on come this 6 months will be diluted, will be nullified in coming business which will come in the ERW in future. So that was the reason, the little bit pressure on this 6 months over there. And what about your inventory increase, etc.? Our CFO, Mr. Ashok Gupta, will reply this.
See, all our this export orders are under execution. Raw material, all the raw material are in place because we have to complete the export order by end of Q3. So all the material in place, and that's the reason this inventory got substantially increased. And in end of the Q3, the inventory again will come on the regular levels.
Okay. So I just wanted to ask on your raw material front again. So why did the gross margin fall quarter on quarter?
No, the actually gross margin is not gone down so much because the way of presentation, if you see our other income which is the nature of the operation nature.
Okay.
You see, overall, whatever little bit pressure because of the interest and the depreciation, provision was there for the new project, where the result will come for the new project in coming time. That was the one reason. And
Mr. Somaya, the basic reason for pressure on EBITDA margin is basically the time being taken for our ERW to become operational, and
Hello?
So the line got disconnected. One moment. So welcome back, sir. Please go ahead.
And the other income includes 19 crores of foreign exchange gain, which is of business operational nature.
Okay.
overall,
Sir. Okay. So what EBITDA margin do you guide for FY24?
EBITDA margin we are maintaining the same level.
Your conference is no longer being recorded.
Yes. Hello?
Sorry, I couldn't hear you, sir.
Your conference is being recorded.
EBITDA margin, we are maintaining the same status because the oil and gas sector around 11% and water sector between 8 to 9%. The overall average will be approximately 10% in coming quarter as we expected.
So in the first half of the year, you have done less than 10%, around 9%. So to achieve 10% for the whole year, you'll have to do around 11% in the second half. So is that something you think you'll be able to do?
See, whatever guidance is being given for the remaining 2 quarters.
Okay. And can you please tell us what are your key raw materials? Is it iron ore and coking coal?
No, it is HRC and HR plates, HR coils and HR plates.
Is there any price increase in your raw materials, or do you expect any price increase in your raw materials going forward?
So for the time, the price, steel prices are on softening.
Softening, and we are fully hedged actually.
And in fact, we have already hedged all our raw materials.
Thank you, sir. The next question comes from Vignesh Iyer, Sequent Investments. Please go ahead.
Hello, sir. Thank you for the opportunity and congratulations on a very good set of numbers. Sir, I wanted to just understand first question on the unexecuted order book. When you say in your presentation 1,400 crores unexecuted order book, this doesn't include the new order of 380 crores, right?
That includes that order also.
Okay, because just to get an idea of it, because at the end of quarter one, you had around 1,900 crores of unexecuted order book, and we have executed around 1,000 crores of order book in quarter two. So that leaves you with 900 crores of order book, and we have got 2 orders, one of 400 crores and one 380 crores. So technically, shouldn't be your order book more than 1,400 crores?
It is the order book position, whatever we are given is as on date.
Okay. Right. Okay. I thought it was at the end of quarter two, the order book was.
It is as on date.
As on date. Right. I get that point. Sir, secondly, if I'm getting it right, whatever we have executed in quarter two is related to exports, right? I mean, if I'm not wrong, our earlier order book got executed. So doesn't in nature of the operation, that is, you have got more margins when it comes to export orders. So I'm confused why our margins have fallen down. That's why.
So the EBITDA margin, if you see, the EBITDA margin is still at 9.44 levels only, and part of it is exports and part of it is domestic. It's not 100% export because we have done almost 30% of water business this quarter as well. And the PAT levels are down is because of two issues, which is of the ERW, the interest, and the depreciation going up. That's why the PAT percentage changed, which will be obviously recovered because ERW is just started and we've got the approvals. And now that will culminate into next year. So that's the only reason.
Right. Got it. And sir, our 550 crore capex that we are putting, we are expected that the project should be completed by this year, Q4. How is the capex funded? Means what is the mix of debt and equity for that?
So it's a 70-30% mix of debt and equity, out of which obviously 30% is by the company, and we've invested more or less quite a large amount of it already into the.
So accordingly, the debt would by Q4 be higher, right? I mean, in the books of
not in this. In the new company.
New company.
The new company. Not
it is going into the new company, the MSSTL, which is setting up that plant.
I mean, that would be the subsidiary to Man Industries, right? I mean, at consolidated level, it would be higher, right?
Correct, yes. Consolidated level, it will be higher.
Right. So, and what is that cost of debt that we have to pay on that project? I mean, whatever we have taken.
Sorry, come again?
I mean, for the 70% of the 550 crores that we are going to take debt from the bank or anywhere, what is the cost of debt that would be? What is the cost?
Right. Between 9.5, some foreign debts are also there, and during the construction period, it will go to the cost of is a capex. It will go to the cost of project. So that's why there will be not an additional burden on main industry in coming quarter also.
Right. Understood. Sir, just one big question. If we could, in future classify any, income that is related to operating as other operating income in, our, books of accounts and show it in part of financial statement, because other income looks like it is not, nature of income related to operations. So kind of, unless the presentation is not out earlier, it is very difficult to understand if it is other operating income or other income. So that's a request from my side.
Thank you very much. We are working on that issue. And in future also we will mention separately the total revenue and operation income which is related to the business, because we are not a speculative, etc. But the foreign exchange gain at the time of the actual shipment made and at the time of hedging the rupees, that difference coming to the operation income, which is related to the business income, and our other income apart from this operation is very minimal.
Right.
Maybe some export incentive, etc. So no speculative, no derivatives, only purely business income in our case.
Yeah, understood. Just that the first look of the statement, it makes it look like as if it is one-off in nature. That's why it was just something I spotted, so I wanted you guys to let you know. Fine, sir. That's all from my side, and all the best.
Thank you.
Thank you, sir. Participants are kindly requested to ask 2 questions in the initial round and may join the queue for more questions. The next question comes from Harsha, Dimensional Securities. Please go ahead.
Hi, good afternoon, sir. When I look at your standalone and consolidated numbers, your EBITDA in standalone is around 95 crore and consol is 88 crore. So just wanted to understand which of our subsidiaries incurring that loss of around 7-8 crores?
The other knocking off this intra-group company transactions, as whatever interest being charged on the funds provided to subsidiaries, the interest got knocked off. So that the reason the consolidated profit is lower by.
This is a purely technical entry as per the accounting norms we have to pass.
Okay. So if I look at a consolidated EBITDA margin, it's at around 8.55%, including all the forex income. So when we guide 10 to 11%, we guide it for consolidated numbers, right?
Yes.
Sorry?
Yes.
Okay. Sure. That was from my end. Thank you.
Thank you. Thanks a lot.
Thank you, sir. The next question comes from Akhilesh B., individual investor. Please go ahead.
Hi, sir. Good afternoon. Congratulations on a strong performance. I just have a couple of questions. Sir, I wanted to understand why are the margins in the water segment lower than the oil and gas segment? Is there some higher competition in that segment? Or, what are the reasons for lower margins in the water segment?
So mainly, most of the water works, if it is bare pipe, then obviously we do not get the margins of the coating of that particular business. And also, water does not need a lot of the further testings which the oil and gas need. And also, the steel quality is different. So that's why always there is quite a stiff competition in water, and that's why the margins are generally the EBITDA margins are slightly lower.
Our more business is the hydrocarbon sector, where the little bit is better. Our revenue around 80% comes from hydrocarbon sector, depend on quarter to quarter. But mostly, we are a hydrocarbon sector supplier of the pipes, not only water works.
Sir, is it fair to say that in the remaining part of this financial year, only your current unexecuted order book will be executable? That is to say that the revenue would not be higher than, say, 1,700 crores over the next 2 quarters? Or will you also be able to execute any new orders you win within this financial year?
It is an ongoing process. The bid position is always continuous between 10,000 to 14,000 crore at a time, depending on which project coming, what time coming, separate, different evolution stages. So apart from 1,400, which is pending from this month, not from the quarter ended. And we are continuing to get the other business also. But definitely we are doing much better than compared to last year. There will be the growth 40 to 50% in closing 2024. So the ongoing regular business we get from the market.
Oh, noted, sir. Wish you all a happy Diwali.
Thank you. Thank you, Akhilesh.
Thank you, sir. The next question comes from Darshil Javeri, Crown Capital. Please go ahead.
Darshan, we cannot hear you.
Yes, please go ahead.
Congratulations on a great sorry for my question. Might be a bit troubled. My line was not clear, sir. In terms of guidance, what are we saying in terms of revenue for FY24 and FY25?
Darshan, your voice is cracking. We cannot hear you.
Hello. Is this better, sir?
Yeah, go on.
Yeah, please.
Yeah, sir. Just wanted to ask.
Darshan, your
voice
voice.
FY25.
We are not getting what you are talking. Your voice is cracking.
I'll join back.
So the next question comes from Varun Mehta, WealthLink Investments. Please go ahead.
Good afternoon, sir.
Good afternoon.
Sir, can you just give us some idea what revenues and what margins we can expect from our ERW plant and the seamless pipe plant going ahead?
ERW, recently we got the API go-ahead, and now we are going to participate the tenders, new tenders. Still we are not participated because of the BIS and ISO as well as the API. And now the lot of tenders are coming, so we will be able to participate. This will be the over and above whatever we are doing this moment, SAW pipe. I cannot give any figure because this is a tender-based business mostly, and some city gas distribution business. I can say we are a good equipment, good approvals now we got, and we are ready to get the better revenue in coming time.
Okay. And so the margins would be higher for ERW and seamless pipe business from what we are doing from the carbon pipe business?
Depend in future, but almost the same client, same nature of the business of the hydrocarbon. So we are also trying to see the maintainability, whatever we projected and we announced earlier also, it will be same.
Okay. And sir, this quarter, the interest cost, which was 22 crore, how much is the interest burden and the bank charges? Can you bifurcate?
Bank charge? No, you are talking about the additional interest, whatever we paid in the ERW. You are talking the debt?
No, sir. No. I'm talking about the overall what we have reported this quarter, 22 crore of finance cost. So how much is the bank charges and how much is the interest cost? Yes, sir.
Mainly it is interest charge and LCM bank charges is also some sort of finance cost.
Maybe
So mostly bank charges with LC and everything is 12 crores and the interest charge is 8 crores.
Okay, 12 net, right. And okay, fine, sir. Thank you so much. Thank you.
Thank you, sir. The next question comes from Mukul Jain, individual investor. Please go ahead.
Hi, sir. Just want a bifurcation of export versus domestic and oil and gas versus water for this quarter's revenue and the whole order book as well.
The export and domestic, we can say, Gupta ji, our CFO, 80% export on this quarter, 20% domestic. In domestic, you can say the mostly was the water, oil and gas, and because of ERW CTG project, we got the approval this moment, and then it is likely to up in coming time.
Certain percentage of export was also for water. So overall, if you see the export and domestic, there was certain part of water export as well.
So roughly 75-25, I assume.
You can say roughly. Yeah, we will not exact figure.
Okay. And can you say for the current order book as well, 1,400 crores?
1,400 crore, you can bifurcate roughly 70.
It's around 60-40. 60 is oil and gas and 40
70% oil and gas and 30% this ratio. It changes every time, every quarter, little bit.
Okay. And so just want a rough guidance, like if I assume export margins are way better than the domestic ones, so can you guide how the margin differs from product to product, maybe from country which you are exporting? So a bit rough or brief color on that.
No, product to product, project to project, and country to country, what is the designing, etc., and what value-added products are coming. Sometimes we get the very good value-added, better quality of coating, etc. It changes all the time.
Okay. So for Q2, like it is 75% of the export. So you mean to say that majority of the product export, maybe from the country, project to project, all are low value products? Or low margin maybe?
Not low margin. We don't take low margin. Maybe little bit better export. That's why we always try to get the better value product and the product mix. High value added.
Okay, because GP margin, there is substantial decrease, and despite having 75% of the export in the Q2.
No, the reason which Mr. Gupta already given here, there was other income, which is really not other income. It was the income from the operation, which is related to our own business. That's why we are now we are going to change our presentation in future for your more convenient to assess what is this thing. But our guidance is more clear. Apart from account standards, our guidance is very clear. The EBITDA, almost we are maintaining the same manner.
Okay, sir. And lastly, any update on Merino shelter? Any amount received, or you are forcing any receivable in coming month?
Yeah, Marino shelter we have disposed of, and the final documentation on the way, and the company will get this thing, and very soon you will get the news through our exchange in very few days. The agreement is under process, and you will get the news from exchange.
Okay, sir, that's great. And then one last question. This order book of 1,400 crore, do you think it will be all executed in current year? Because it's like 6 months delivery time.
Mostly will be covered over there, but new orders also will come also. So some new orders, some old. So overlapping, it is continued because this depend on the client and project on project.
Okay, sir. That is very helpful. Thank you so much.
Thank you, sir. The next question comes from Darshil Javeri, Crown Capital. Please go ahead.
Hello. Hi. So sorry, sir, my line had some issues. I hope I'm audible right now.
Okay. Now you're audible, yes, please.
Yeah. Thank you so much, sir. So, yeah, sir, just again, sorry, because of my line, I couldn't hear some stuff, so sorry for a repetitive question. In terms of guidance that I wanted to know, sir, will we pay, what kind of guidance for revenue for FY24 and 25, we can do in terms of revenue, sir? That's the first question. And the margins, sir, just wanted to understand when we say EBITDA margins, as our other income is mostly operational in nature, so as currently presented, we should add other income to our other income and then we'll get our correct EBITDA. Correct, sir?
Yes.
Okay. And the guidance, sir?
Guidance will be around 15%, at least minimum growth of 15% from this year.
The actual guidance, we are working it out because depend on our new projects which is coming, the SS plant and other things over there. So the right guidance we will be able to give from next quarter onward. This moment, but definitely there is a growth in our product and our industry and our capability utilization, and there will be the positive guidance in future. We will give you the little idea.
Okay, sir. And just, sir, just wanted to ask in terms of macro issues because of the war and anything, does that impact us in any way, like any risk that we see, maybe, so that hamper the order flow or something?
You are talking about this recent Israel-Hamas war.
Yeah.
You are talking?
Yes, sir.
Directly we are not affected at all because there is no business in that zone particularly. But overall, Middle East we have the more business because of oil and gas. But apparently there is no impact this moment.
Oh, okay. Currently there is no impact, sir. Okay, perfect, sir. Thank you so much, sir. All the best. Thank you.
Thank you, sir. The next question comes from Samapat Nayak, Tiger Assets Private Limited. Please go ahead.
Hello. Sir, will we receive any kind of a subsidy from government for a new plant with respect to, Jammu or MP? Do we receive any yet, and are we going to receive going forward as well?
We are working with the government. Still, the ERW plant is started, and there was little subsidies in Gujarat we are likely to get over there. And the Madhya Pradesh, our old approval, which will come in near future. And the other we are working this moment. But once we get the exemption certificate, we will definitely announce in future.
So, sir, what will be the size of that subsidy? Any idea?
So this time is not a fair to give any figure, but definitely in near future, in maybe next meeting, we will announce something in regard to that.
Okay, great. Sir, also I was not able to understand the part of Merino shelter. So by when can we expect the inflow, and what will be the size of that inflow?
The Merino shelter, as we already announced, there was a development over there, partly this and some development, and then we will get the good money in future. but that agreement is going on with the solicitor firms, etc., for development, etc. So we will be able, once we sign, then we announce in the exchange.
So, sir, what can be the timeline which we can expect for the same?
Maybe maximum 1 month time. It's progressing.
Okay. Understood, sir. Thank you.
So the follow-up question comes from Varun Mehta, WealthLink Investments. Please go ahead.
Hello.
Yeah, Mehtaji.
Sir, I just wanted to ask, on this balance sheet, we have a entry of goodwill this quarter for 62 crores.
Okay, our CFO will reply about this goodwill entry.
Okay.
So this is basically knocking off of our investments and reserves in the consolidation. By virtue of that, knocking off of this Man Industries having an investment of 102 crores, with some reserves in Marino Shelters. So after doing that knocking off, that 62 crores goodwill is created in the consolidation.
Understood. Thank you. This is the question. Thank you so much.
Thank you, sir. The follow-up question comes from Utkarsh Somaiya, individual investor. Please go ahead.
So can you please tell us what your interest cost will be for the next 2 quarters?
Maybe on the similar lines.
20 crores a quarter.
But of course the revenue from ERW, that will also start in maybe in Q4. So the overall real numbers may be in the same line, but the overall percentage wise the finance cost should be lower in H2.
Yeah, per metric ton cost is going to reduce it, and we see the maximum utilization of the new plant also. Then it will be diluted per ton.
So we expect another 1,500 crores of revenue in the second half, right? Which will take us to 3,000 crores of guided revenue. Is that right?
You can guess almost. You are saying almost is okay, but we are trying much better. We are trying hard to get the more orders and to get the much better situation.
Okay. And sir, in FY25, do you expect your EBITDA margin to be higher than 10% given your value-added products are going to come online?
Yeah, because some value-added we got some new value-added products also, and it will reflect in this quarter. When we meet in the next quarter, you will see, and then comment, maybe better.
Okay. Thank you so much, and best of luck.
Thank you, sir. The next follow-up question comes from Vignesh Iyer, Sequent Investments. Please go ahead.
Sir, I just wanted to ask, this bid book of around 12,000 crores that we have currently, what is our usual conversion rate? How much do we manage? What is the probability of the win that we have here?
It is very difficult. What is the conversion and success rate? Depend project evaluation stage, etc. That's why, and how we are serious to get the business, etc. There are a lot of formulas, very, very difficult to announce. But we get the business in the company history. If you see last 20 years, we get the business, whatever our need is, almost we get it. Then we get more serious. So
I mean, do we have a number historically what it has been, like 20% or 22% of whatever we have ordered, as in historically?
No. It is very, very ongoing process and very dynamic conditions, because today we are talking, tomorrow we get something we do not know. Because of this, most of the companies are oil and gas, which they announced in the 11th moment. And suppose tomorrow new bid is there and we win it. So this is ongoing dynamic conditions, but the company is confident to get the business, whatever the needed to fulfill the company's requirement.
Right.
And to award to the shareholders.
Absolutely, sir. Also, sir, what would be our asset turn in this ERW plant and stainless steel plant? I mean, this seamless steel is the plant we are going to come up with, right, in quarter 4. That plant separately, what would be our asset turn and what would be the ERW asset turn? If you could give me a ballpark figure would do also.
ERW, as we said, we got the API, everything now. We will get the result very soon, very quickly. SS, it is a next year, and then it is under construction time, etc. So you want to know the EBITDA, etc. So this moment is not.
No. I'm talking about what would be the maximum revenue that we can do from this plant. I mean, best case.
ERW we can do between 800 to 1,000 crores, and SS is also between 800 to 1,000 crores.
In initial stages. Then subsequently next year will be more important.
Okay. This is the peak revenue we can achieve with the plant, right?
Peak revenue would be approximately between 800 to 1,000 crores for both the plants.
Each. Okay. And what is our current capacity? I mean, excluding this, what we can do from our current capacity in peak revenue?
Theoretically is around 1 million. For LSO and XO, for ERW is around 125,000 tons, and SS is around 20,000 tons.
Yeah, that's the capacity. I mean, what peak turnover can we do from our current setup, excluding ERW and SS?
See, excluding ERW, SS, only with the LSO, XO, the peak capacity we can do is more than probably around 500,000 tons. But it all depends, because a lot of time nowadays the smaller lines, which are 16-18-inch line comes, then automatically the tonnage goes down and the order also goes on for a longer time. So theoretically and practically, if you get a good size order of a 42-inch, 20 mm, you can run it for 2 years. We can manufacture easily 500,000 tons a year. So it varies from order to order, but this is what we can do.
Okay, right, sir. That's all from my side, and all the best.
Thank you, sir. Dear participants, if you have any questions, please press star and 1 on your telephone keypad. So the next question comes from Dwanil Shah, iWealth Management. Please go ahead.
Hello, sir. Good afternoon, and congrats on a good set of numbers.
Thank you.
Am I audible?
Yes, you are.
Yeah. Sir, just wanted to know on the volumes which we've executed in the Q1. If you can help us out on that.
Okay, we will check it and get back to you on that, the exact volumes which were done for the quarter. And then
Sure. And sir, just on the previous participant question also. So when I see historically, sir, we've been kind of doing on a much lower utilization, right? So now the demand and the whole scenario looks very good, and the capex cycle is also supposedly pretty long, right? So how do you see this, sir, in terms of our overall utilization, maybe 1-2 years down the line?
No, that depend on we have the capacity rated.
Correct, sir.
Capacity is a different thing, but the range is different. All the equipment, we have the 4 plants. Every plant is producing up to such a range, different kind of range. So we cannot say that we are very underutilization, overutilization. Depend on the product mix, which range, what are these things. The lot of formulas are there. But we are reasonably booked. Reasonable business is going on. Market, oil and gas sector is doing very well in the worldwide. And that's why the projections are much better. More spending by the oil companies in coming future. I can say you the more capacity utilization will be there. As some bottlenecking also we are removing at the time. So that I can give this answer this manner.
Got your point, sir. And sir, one more question I had was on our capex on the seamless side. Sir, in the presentation it's written that by Q3, Q4 of this year our plant will start.
Yeah, that's Q3, Q4 of 2024.
So, sir, so it will be next year, right?
Yes, 2024. Q3 and
2024 calendar year.
Calendar year, 24-25.
Not financial year. Okay. Got it.
Thank you, sir. The next follow-up question comes from Harsh Shah, Dimensional Securities. Please go ahead.
Hello.
Yes, sir.
Yeah. So actually, when we were last speaking in August, you had a mid-quarter conference call when we had guided 10 to 11% margins. So just wanted to get a sense that this quarter we ended at around 8.5% if you look at the console numbers for the entire half H1 FY24. We are standing at around 8.9% kind of a number. So just wanted to understand where did our assessment go wrong and what would lead to that margin expansion towards 10.5% going ahead.
So, see, always generally we target between 10 to 11, but 9 to 11 is a fair assessment of where we end up reaching. Depends on the size of orders and depends on different variety of orders. Also to keep the mills busy and grades. And sometimes when we get into orders, some steel gets expensive. Sometimes, it is much more beneficial. So that is our target range. And this quarter also, because we have not changed the format of reporting of other income, that is why it is showing differently. Otherwise, even in this quarter, we are at around 9.44 EBITDA on a standalone basis. Console basis, like we told you, that 6 crores of the interest which is set off, which will come back into the company once the Merino deal is done. So whatever interest is charged, it will be reversed back to the company when the company is sold. So it is an accounting entry. That is why that 8.85 in the console level. But actually on the standalone level, we are at 9.44 levels of the EBITDA. And we will look at around 9 to 11% to upgrade with the ERW coming in everything. So that is the outlook. So we are working towards different things to at least increase 1% EBITDA in the next year with value additions and everything.
Okay. And currently, what is the outlook on the raw material? How are the prices behaving?
The raw material is quite stable right now. It is not too aggressive jump or nothing. It's quite stable right now.
Okay. And in terms of competition, are you seeing competition building up or the situation remains stable?
There is always a lot of competition. There is always a lot of competition in our business. So I do not see any major changes in that. And we feel because of the competition, the margins will remain the same. Certain orders, certain countries where other people are not approved, when we get those orders, obviously the margins are higher. When everyone is approved and everyone's bidding, obviously you go more aggressive and obviously the margins change and how aggressive you want to take that order also. So we see going forward, at least for 1 year, we see the same kind of business model.
Sure. And in terms of geography mix, so with exporting 80% of our revenue, which are the geographies that constitute most of our sales?
Mostly MENA region and Southeast Asia.
Okay, and even our bidding pipelines are into those regions?
Yeah.
Okay, sure. And just one suggestion, sir, if it would be really great if you can, also put out volume number every quarter. It helps us analyze the company in a much better way.
We will look into it.
Because our business is volume based, so that number will be really helpful.
But not really volume based. Sometimes you do a 10,000 ton order in which you get at a $2,000 a ton because it's a very heavy sour grade of Qatar or somewhere in the world. So it does not give a true picture, to be honest. But it's a point well noted and we will look into it.
Sure. Thank you so much.
Thank you, sir. Dear participants, if you have any questions, please press star and 1 on your telephone keypad. follow-up question comes from Mukul Jain, individual investor. Please go ahead.
Yeah. Hi, sir. Sir, this Q2 you have started steel bends and connectors. So any more color on it? Like, is it additional capacity, or you'll be converting current products into the bends and then selling it, maybe having higher realization?
Yes, so bends are basically the same pipes which we get the orders of bending those pipes. So it's a value-added product like how we do coating, and that will start reflecting from the next quarter. We already got some business and at a good margin, so that will start reflecting from next quarter onwards on the bottom line.
Initial order we got around 20 crore rupees roughly, and this is the first big. It will reflect in coming time. So
this bends is of saw pipe or it is of ERW?
Saw pipe.
Sorry?
But we can produce it through ERW also, and mostly this is saw pipe right now.
Okay. Sir, one more question on the purchase side. Like, how much of the percentage of raw material do you import versus domestic sourcing?
Again, the mix and the condition. Okay, what is the condition of the local pricing, the availability of the grade in the local, whether it's available or not. Whatever order we are getting, the indigenous raw material availability is number one. Number two, the price. And if we are exporting, then we have to import and then export a lot of parameters. So there is not a fixed percentage, but mostly 70% import. And whatever we are exporting, mostly you can say we are import and export. Other domestic we can buy from domestically and produce here for domestic project also.
All these are HRC, right?
HRC, HR plate, both.
Okay. So if you can give the proportion in Q2, like how much is imported in the purchase?
Maybe 60-70% imported, because the grade, whatever we are exporting, which is not made in India.
Okay. So one question on this accounting front. Like now, Forex gains or loss you record in other income. Now, subsequently, when you change the presentation, where will this be recorded? So will it go in other expenses or somewhere else?
No, we are taking the expert opinion, maybe operation income, etc. So we are expert opinion, our CFO talking to this thing for better presentation. In future, you will be more clarity for this issue.
Okay, sir. Okay, no problem. Thank you, sir. That's so much.
Thank you, sir. There are no further questions. Now I hand over the floor to management team for closing comments.
Thank you all for participating in this earnings call. I hope we were able to answer your questions satisfactorily and at the same time offer insight into our business. If you have any further question or I would like to know, or if you would like to know more about the company, please reach out to the investor relations manager at Velorum Advisors. Thank you. Stay safe and stay healthy, and wish you happy Diwali to all the participants and all people. Thank you.
Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Doorsabha's conference call service. You may disconnect your lines now. Thank you and have a pleasant evening.